The final stretch of 2025, whether a Santa rally is still possible, and what this choppy end-of-year trade means for the start of next year. Let's ask our panel. Partners Groups, Anastasia, Amoroso, CNBC contributor, Payne Capital's Courtney, Garcia, Robinhood, Stephanie Guild. It's good to have everybody with us. Anastasia, I'll start with you.
Good to see you.
The tape feels still kind of heavy. I mean, we're getting a nice bounce today in the NASDAQ. It's much needed. I don't know how much conviction is behind it, though, in the near term. How do you feel?
Look, I don't know. Near term, I think people may want to lock in some of the gains in what has been such a great trade all year, which is the AI trade. But I do think we did get a couple of pieces of really good news overnight and also this morning. First of all, the Micron news. It's been a while since you had a memory chip company say that their demand is outpacing supply. So that's all due to AI. So that re-underwrites that conviction there. And then the second piece of good news is, of course, the CPI number and the fact that the services inflation is now running at 2.3% year over year. So you take those two things together, and I think they do, give investors some sort of a conviction. And I will say more broadly, Scott, that I think, AI trade had a bit of a pullback, had a little bit of consolidation. But if you look at the adoption of artificial intelligence, if you look at the productivity gains behind AI, and if you actually look at monetization, all those things are progressing in the right direction. So maybe this is some pause, some weakness, but I would actually step in and buy with the expectations for continued strength into 2026.
Well, you would. So, Court, Jonathan Krinsky is out today, says, while it's premature to say this is the top for AI stocks, evidence is growing that it's more than just a speed bump. You agree with that or disagree?
Yeah, I don't think this is like a bubble that's bursting right now by any means. I know that's become a continued conversation here on Wall Street. And yes, it is getting expensive. And I do think you want to start to broaden out your portfolio. But I think when we're looking at earnings growth next year, technology is still expected to have like 28% earnings growth going into 2026. But when you're looking at like materials are also over 20%, industrials are supposed to be over 15%. There's plenty of other places to put your money right now. I think you bring up a good point. People are looking in to lock into some of these profits after such a good year that we've had. And I think it's smart to do so. So I don't want to get out of AI, but if you haven't made any changes into your portfolio, and a lot of people have not, you are really overweight right now. And when you're looking at tech and communication services, that's over 45% of the S&P 500. There's a lot of concentration risk right now, and I think you want to be aware of that.
Steph, I feel like you've been one who's been out there saying on this program and maybe elsewhere that you're a little concerned about what's been happening with some of the AI story, the debt particularly, we've been talking about on numerous occasions. So where does that leave you now?
I think it's shown up a couple of times in the market, and starting a few weeks ago, we started rotating into names that were just demolished this year and started to look like they'd had a turnaround, right? So Lululemon is something, right? It's looking good right now, and it's something that I think speaks to that, where you're seeing a change in the leadership, you're seeing a way to try to turn around the business. And look, my daughter asked for Lululemon leggings, so that's sometimes an anecdotal sign to me too. But I actually think we're in a moment where we could be starting to look at like these companies will still make money, like the chip makers, but I do think it will eventually end up a little more commoditized, and that's why I actually do like looking at some of the software names, for example, that can benefit from AI productivity.